There's a lot of speculation, and obviously the number out of the trade surplus number out of China is causing a little bit of nervousness. We are coming towards a festive season, towards the end of the year. So volumes are going to be slightly lower. We're going to be going into closeout next week, and with the holiday coming through on Thursday, the market's really slowing down a little bit. Possibly a lot of the action priced in, and with a lot of news in the market, we're just really looking for some finalization, and we're going to be looking to the US next week out of the FOMC meeting to really give us some direction. So not really much driving us this afternoon.
Oh, as I mentioned, we've got inflation numbers out of China tomorrow. It's expected to hit 5.1%. A lot of talk of further tightening. That said, we did see the surplus number slipping somewhat from $27 billion in October to $22.9 billion in November. How is the market taking all of this? Because we're starting to see commodity prices starting to rebound somewhat.
Yes, Lily, I think in terms of commodity prices, we have seen some prices coming under a bit of pressure. We are at the time where investors are taking some money off the table. We've had this massive 1,500 point run in the market over the last week or so, and it's really closing up shop, taking some money off the table, and really, you know, with traders and investors not being at their desks, closing off their books for the end of the year, and then come back in the new year and see what happens.
Some markets looking slightly toppish. Looking at the Nasdaq, currently sitting at a 3-year high. The Seoul markets also sitting at a 3-year high, and we've got European markets sitting at 26-month highs. At least some of the equity markets doing quite well there. What is your outlook for the South African market going forward? I mean, you're talking about volumes being slightly softer. Do you think we could see a little bit of downside by the end of December?
Helene, that's very possible. If we do get, looking forward to next week, if we do get no real news out of the FOMC meeting, QE3 being priced into the market, a lot of clients are going to be taking, closing off those positions, lower volume. There is a possibility that we could come off with the absence of actual activity in the market.
Let's touch on Anglo American securing the license for its Minas Rio iron ore project in Brazil. This overall good news for Anglo American. We've seen the stock gaining some ground today.
Correct, Eleni. We believe that Anglo American has underperformed its rivals because of this reason. This license will allow them to open, to really start producing in the new mine, look at preparing a plant, and really they had come out previously saying that it's going to cost up to 4.6 billion in the delay of the licenses. So the investors really looking at that very positively, that they're going to be able to pull back on those costs and really catch up with their rivals in the market. And we have seen they've come off 2.6% over the last 2 days, and we have seen a little bit of recovery. I mean, Billiton has definitely outperformed Anglo's, but very positive for Anglo American, and it's going to be able to compete going forward.
We've seen over $50 movements coming through for the yellow metal, for gold that is. Of course, massive volatility on the back of the dollar, and of course bond yields being relatively volatile in the US. That said, we heard news out of DRD Gold that it's going to be getting additional cash per ton. So overall good news for this company.
Correct, Lenny. The gold industry has really been underperforming, and we saw nicely in terms of the manufacturing numbers that we are seeing an increase in the manufacturing space for our gold mines. So it's very positive for DRD. The Blade 4 strategy needs to be rethought there, because they're paying about 330,000 rand per kilo, and the news that they're able to increase their volumes and get a higher price for their gold is definitely more positive for them. We, however, are quite cautious, and we will have to see how they perform into the next year, but very positive for them going forward.
Let's touch on the gold price. I mentioned a little earlier the dollar taking a bit of a breather after quite a big rally this week. It's all about those bond yields in the US and talk of tax cuts coming to the fore as well. Your view on where you think commodity prices are going, is it really going to be about the euro-dollar movement?
Eleni, it's going to be about the year, probably more the dollar. The market has priced in a weaker dollar in probably the long term. We obviously are seeing concerns coming out of Europe. That seems to have subdued with confidence coming back into the year. Obviously with Ireland's re-rating down 3 levels by Fitch has kind of brought a little bit of that to the surface today. So we're seeing an excuse to take a bit off, and we're seeing a slightly stronger dollar and obviously a weaker euro. The IMF has really come through to say they're going to be sorting that out. So we're seeing possibly a stronger euro and a weaker dollar still in the short term until we see real support numbers coming out of the US that will help with a stronger dollar.
Where does that leave the rand, Yolanda, looking at it? 6.90 to the US dollar. In fact, we are still seeing a little bit of strength coming through when it comes to the euro rand cross as well. Do you think we can maintain these levels until we end the year off?
Helene, that's very possible. We're still seeing limited cash flows into emerging currencies, and I think we're still going to we'll probably maintain a stronger rand to the end of the year, unless there are any surprises. But we're expecting the rand to kind of trade at these levels until the end of the year.